day to everyone joining us from around the world. Whether you're just waking up midway through your trading session or winding down for the night, welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Scarlett and I will be guiding you through this exciting 2-hour journey as your host. Well, today live stream is not just a presentation, it's a conversation. It's a window into the engine room of one of the most fast-growing and forward-thinking funded trading firms in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have helped shape what WeMasterTrade represents today. Skilled traders, mentors, and role models within our community. First, let me introduce the ever-composed, always insightful owners. Welcome, owners.
Thank you so much, Scarlett. Hello, everyone, and thank you for spending your time with us. I'm totally looking forward to today's session. There's so much to cover, not just about trading strategy or rules, about the full ecosystem that WeMasterTrade offer, from how you start, how you grow, to how you earn. This is kind of platform that doesn't just a trade, this build trader.
Absolutely. And next to his is someone who brings sharp and analyzes and clarity to every chart and conversations. And he's strategic, he's sharp, and he's a real force into our trading space. Please welcome Ralph.
Thank you, Scarlett, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we are going to unpack everything, not just what WeMasterTrade offers, but how traders can truly take advantage of each part of our system, from packages to promotions to scaling and long-term profit sharing. If you have ever had questions or even doubts, today is the day to ask them.
And that's exactly what we're here for. Whether you're brand new to WeMasterTrade or already a part of our funded trader program, today's live stream is going to give you the full picture, not just the highlight reel. Over the course of this session, we're going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we're doing things differently from traditional brokers or platforms. Now I want to be clear, this isn't about sales, this is about understanding. We want to know what you're signing up for, what kind of structure supports your journey, and how you can use that structure to not just succeed, but scale.
And speaking of structures, we will begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not a broker, which is a very important distinction. Unlike brokers who profit from volumes or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that philosophy flow everything we offer, especially our trading packages, which we'll be discussing in detail. We'll explain the logic behind each one, what kind of trader they design for, and how the structure change depend on the whether you choose the challenge model or instant funding model. So, if you ever look at our package and thought, which one is right for me? Today, we will answer that.
And more than that, we'll also do a live comparison between packages. We'll break down pricing, account sizes, maximum drawdowns, consistency rules, and even payouts side by side to have you make a fully informed decision. It's one thing to see numbers on the website, it's another thing to understand the intention behind it.
Right, and once you understand the packages, the next question is always how do I stay compliant while trading? So we will move naturally into discussing trading rules, which honestly is one of the most important parts of today's sections. We will explain what the die loss limit is, how it's calculated, why it includes both closed and floating P&L, and how to avoid violating it. Especially overnight, we will go into the maximum total loss, the consistency ratio, and we will even address common misunderstandings about trade sizing and risk per trade policies.
And we want to explain rule in installation. We'll explain them in the context of live trading decision. We'll share some personal example of mistake I make when I first start trading under funded condition and how I adjusted. Because rules aren't meant to restrict you, they dare to protect you integrity of your growth.
And while we're on the topic of helping you succeed, we'll be guiding you through our current promotion plan, including limited time discount codes, trader support campaigns, bonus capital opportunities, and how to properly qualify and submit proof. We have some amazing response to our promotion, but also some confusions. So we'll be showing you exactly what to do step by step.
And from there, we will transition to a discussion on our scale plan, which I personally think is one of the most underrated parts of WeMasterTrade's offering. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded traders.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit sharing model. This is the heart of what makes different from broad firm. When you trade on a fund account and generate profit without breaking rules, we share that profit with you up to 19%. But that's more issue than just the percentage. We plan the full payout cycle, ratio, and timeline today.
Now, I know many of you watching today aren't just traders, you're also educators, influencers, or people with large networks. That's why we're also taking time to explain our affiliate program, and we'll do it transparently. We walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation of the two referee rule and minimum funding conditions.
This is especially important because we want all our traders to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income streams.
So, as you can tell, this is not just a surface level live stream. We're diving into everything: packages, rules, promos, scale-up path, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want this to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderator are watching, and we will answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we will leave timestamp and summaries below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible, and they really care about helping traders succeed.
And to wrap up this welcome, I would like to say this: WeMasterTrade is not just a platform, it's a commitment. And a commitment to build real traders, to create fair, structured, and scalable pathway for people around the world who are serious about trading as a profession, not a game. So if you're here to grow, to understand, and to take action, you're exactly where you need to be. Let's dive into the journey together. Let's begin, and once again, welcome to the WeMasterTrade live stream. Well, now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full picture of who WeMasterTrade really is, what we believe in, and why we built this platform the way we have. Because when you're putting your trust and your trading into a company, understanding its philosophy isn't just helpful, it's essential. And so this next segment is about origin, intentions, and impact. It's about how WeMasterTrade began and what values underpin the firm, and how those values translate into real tools and outcomes for traders like you. To walk through that, I'm joined, as always, by two people who live and breathe these principles. Owners and Ralph, let's start at the beginning.
Thanks, Scarlett. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many broker firms or broker that evolved from traditional financial, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital, regardless of the background, location, or financial situation. We were founded in 2022 as part of WeMasterTrade Group, headquartered in Vancouver, Canada, while WeMasterTrade built its name on signal sharing, investor network, and copy trading tech. WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking that's our saving.
And it's important to note that WeMasterTrade is not broker, that's not just a label, it's a fundamental difference. We don't profit from spreads or commissions, our success is directly tied to the success of our traders. That's why everything we build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk, we give you the roadmap, you bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules, we want them to understand the logic behind the structures. That's why we have invested heavily into WeMasterTrade Academy, a training ecosystem built to take you from beginner to a consistently funded professional.
And that academy is something special, with courses ranging from introductory trading to psychology all the way to advanced risk calibrations and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about implementation. We designed the curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your funding account. And to ensure that our system and content meet global standards, WeMasterTrade is proud to hold an ISO 21001 and in 2018 certification, which confirm that our educational products and trader development programs meet rigorous international criteria for quality, structure, and learner engagement.
That certification is a big deal because it shows a long-term commitment to developing traders, not just collecting fees in an industry where many call it platform come and go. WeMasterTrade has positioned itself its real operational stability, compliance framework, and international accountability. We're not here for a season, we're here to help build career.
And we have seen that commitment translate into real stories. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, on talking about how WeMasterTrade help them not just earn more, but trade with purpose. They talk about passing challenge after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We also have had students become full-time traders. We had women re-enter the finance world after career breaks, and we have had young professionals from underbanked regional finally access the market with a funded account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog section where our team of experts and educators share weekly insights, trading psychology, breakdowns, market reaction, and platform updates. We believe that learning never ends, and we keep our traders informed. But let's talk about culture. What makes WeMasterTrade different isn't just the product offering, it's the community mindset. We actively promote trader integrity, respectful competition, and knowledge sharing. Whether you're in a Telegram group, watching our YouTube series, or engaging with us on live support, you'll see that we actually listen.
Well, and I speak honestly here in many platforms. The trader is just a customer. At WeMasterTrade, the trader is a product. Your performance drives the business. Your voice serves the platform, and your consistency determines how far we can scale together. That mutual accountability is rare, and it's something we're proud of.
And if you have ever doubted whether this part is real, whether a trading career is truly within reach, I encourage you to read the testimonials, take a look at our funded accounts, and connect with people who have gone through the system. The stories are real, the capital is real, and the results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a teller, accelerator, and an education-first trading institution. We are here to challenge the status quo to the core of trading access, to build systems that reward performance over promotion, and to create real scalable income opportunities for traders around the world, regardless of their starting point. This is more than a problem, it's trading movement, and if you're ready to be part of it, today's live stream will show you everything you need to know. Thank you, owners and Ralph, for that deep and honest walkthrough. Coming up next, we're going to take this foundation and connect it directly to our actual offering. That means we'll be discussing all the different account packages available at WeMasterTrade, how they differ, who they design for, and what kind of results you can expect from each. So stay with us. It's about to get even more exciting. Welcome once again to the official WeMasterTrade live stream. So now we explore who WeMasterTrade is and the principles we stand for. It's time to move into one of the most essential parts of this live stream, an in-depth discussion on our account packages. This is where it all begins for most traders, choosing the structure that best aligns with their goals, their style, and their current skill level. And when we say packages, we're not just talking about dollar figures, we're talking about frameworks. Each package at WeMasterTrade represents a different pathway toward growth, and today we'll walk you through all of them, what they offer, how they structure, and most importantly, who they design for.
Exactly, Scarlett. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we'll build two distinct product lines for traders: the challenge package and the instant funding package. Its line include variety of account size and configuration because we know that traders come with different trade, risk appetite, and timely.
So let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove their skill before being allocated capital. It is structured, fair, and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, we begin with a small account, and your goal is to meet specific profit target while staying within strict but reasonable risk parameters. There are three stages in the total: phase 1, phase 2, and then the funded stage.
So, take for instance our $10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down by phase.
In phase 1, we need to achieve an 80% profit target with 800 without reaching a 5% daily loss or a 10% overall loss limit. You have unlimited time to achieve this. That's a key difference from many platforms. We don't pressure you with the deadline.
And once you pass phase 1, you will move to phase 2, where your profit target drops to 6%. That means $600. The risk will remain the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once both phases are clear, you enter the funded account. When you trade with real capital, have no profit target, and your profit share jump to 90%. That's one of highest in the industry.
So, who is the $10,000 challenge best for? This account is ideal for newer traders or experienced traders who want to start with lower pressures and learn the system. If you are still refining your strategies or want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect package to begin with.
Now, for those who are confident in their strategy and want to start with a larger account size, we offer $25,000, $50,000, and $100,000 challenge packages. The structure is similar to phases, the same 5% daily and 10% total limits, but the profit targets scale proportionally.
For example, in the 15,000 challenge, you will hit 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the leverage remains the same 1 to 100, giving you room to adjust position sizing.
And who are the mid and high tier challenges best for? The $25,000 to $100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funded accounts. If you have already passed all the broad challenges or have a strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee. For example, just $45 for the $10,000 challenge. This fee is refundable once you become funded and meet minimum performance conditions. And if things don't go your way, you're eligible for a 30% reset discount to start first. And what if you don't want to go through a challenge at all, but instead want to access real capital immediately and get paid based on purely on results? That's where our instant funding package comes into play.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced or disciplined traders the chance to trade real capital from day one. No evaluations, no demo stages, just pure live trading backed by a structured, fair and transparent system.
And when make it even more accessible, you can choose from several different types, depending on your style, preference, and goal. Today, we're going to walk you through each of the 5 main instant funding packages: standard, 51010, 510 euro, and 510 NOBC, and customize. Compare the details, but more importantly, we will help you figure out which package is right for you.
Let me see the scenes quickly. All of our instant funding packages give you live trading access from day one. That means no challenge phases, no evaluations. You pay once, follow the rules, and you're trading live capital. And every account, no matter the size, include no lead time limits, up to 90% profit share, balance-based drawdown, scale-up lane toward $1 million, support for EA swing trades, scaling, and even HFT. Now let's go package by package. And as we go, owner's wrap, I want you to jump into the real advice. Who should actually choose which one, and what kind of traders you've seen succeed with each?
Let's start with the standard package. I always describe this one as the best friend for traders who just want stability. You're getting up to 200,000 in capital with a very manageable 4% daily loss limit and 6% overall limit.
It's like that calm, steady account that doesn't push you to overtrade, and with the profit split up to 90%, there's a serious earning potential even if you are taking a slow and steady approach.
And how about commissions?
Competitive across the board. Forex at 4 per lot, gold at 4 per lot, index at 1, stock at just 0.07 per lot.
And everything is allowed. nails trading, scalping, weekend holding, EAs, HFT, you name it.
So, for the audience, if you're someone who trades regularly, understand your strategy, want a full range of assets, and plan to play a long game, this is your sweet spot.
And who is for? Is perfect for intermediate to advanced traders who already know their edge but don't want to stress with a target-based challenge. And if you have ever had an account blow due to unrealistic rules, you will find the standard model refreshingly fair.
I also say it's a swing trader. The 4 and 6% risk profile give just enough flexibility to hold multi-day position, especially with weekend holding truly all over.
Alright, moving up a gear, let's talk about the Python 10 package. Same capital ceiling up to $200,000, but you now get 5% date loss and a wider 10% overall limit. Why does that matter?
That execution is massive for traders who scale into positions or take multiple entries per setup. You have got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which align well with the risk window. Plus, you still get full support for scalping. EA, new trading is very trader friendly.
And who is it for? Is it best for day traders, especially those trading assets like NASDAQ or gold that move fast? If you have got tested intraday strategies and just need more risk breathing room, this is your package.
And also for traders who want structure for but don't mind having that profit target. A clear milestone motivates some people, especially if they are payout oriented.
Now here's a personal favorite, the 510-0. You'll get a 5% daily and a 10% overall limit, but no profit target, not zero.
And that's a blessing for high precision trader. You're no longer chasing a number. You just focus on protecting equity and growing capital slowly and safely.
This one is loved by low frequency traders and snipers. If you enter 3 to 5 trades a week, this is your space. You are not penalized for patience, you are actually rewarded for it.
Veteran, swing trader, concert trader, people who prioritize consistency over speed. If that's you, you try here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale cleanly. This is their home.
Now for the rule breakers, or rather those who don't want to be evaluated on how even their profits are, the 510 no PC removes profit consistency tracking, right?
Exactly, same 510 risk profile, but you are not required to keep your profit growth smooth. One big winning day is totally fine.
That said, trade copiers are not allowed in this one, so it's a manual trader only. And you need to trade responsibility, but for a risk trader who sometimes big hit spike, this is a play.
And who is it for? It's perfect for high risk reward traders or anyone who has issues with consistency rules and other firms. You trade how you want, just keep it inside the order box.
And last but not least, the customized package. This is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust daily loss, overall loss to your liking. Plus, you can fund up to 400,000, more than any other account.
It's premium, flexible, and comes with on-trading style allowed, including EA's near trading, weekend holding, HFT, and more. And about who is for, top-tier professional at hedge fund traders, signal providers, high volume traders, anyone with a very specific structure in mind, this package lets you build it.
I always say, if you try other model and nothing quite fit, build your own blueprint with custom mind. That freedom is rare.
Well, to sum up, every instant funding package we offer comes with clear risk parameters, fair commissions, deep market success, and real profit potential. There are no time limits, and payouts start as early as one day in.
And no matter your strategy, scalping, swing, algo, and manual, there are an account that's aligned with you. The key is picking the right one now, so you can start building consistency from the start.
And if you are ever unsure, your our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dream. The right fit always outperforms the biggest promise.
Well, up next we'll walk you through exactly how to protect your account, avoid breaches, and understand the key risk and consistency rules that power our entire platform. So stay tuned. This is WeMasterTrade, where real capital meets real strategies. Well, alright, now that you've seen the packages, let's talk about the part that either makes or breaks your accounts. That's right, it's time to dig into trading rules and how to actually stay compliant once you are funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their account, it comes down to one thing, the daily loss limit.
Yes, the dreaded daily loss is the one rule that traders think they understand until it kicks them out of their account at 3:17 p.m. on a random Tuesday.
But here's the good news. When you understand how it works, really works, it's become one of your best tools for risk control. So today, let's break it down from top to bottom.
So what is the daily loss limit, also called maximum daily loss?
It's the maximum amount of loss you are allowed to incur in both floating and close trade on any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what strips a lot of people up.
Let's walk through a live example. Imagine if the start of day 5, your balance is $105,000. Your equity, however, is higher, $107,000, because of open floating profit.
If you're on a 4% daily loss limit, we calculate it of the highest number. It's a 107,000.
So 4% of 107,000 is around $4,000. That means your equity for the rest of that day can't drop below 102,000, or boom, the account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close, it's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below that threshold for even a second, that's it.
Now let's reverse it. Say it's the start of day 7 and your balance is $100,000, but your equity is $99,000 because your open trades are slightly in loss.
Since balance is higher, we base the 4% on the initial balance, so 4,000.
So now your equity must stay above $96,000 throughout the day. If it drops to $95,999, auto liquidations kicks in, no warning, no margin calls.
And what happens if you break it? The system will send a market orders to close on trades. Everything liquidates, your account is disabled, and you can't trade again unless you budget in your bucket.
And here the kicker. The auto close happens when the system detects the threshold was crossed. But due to the market fluctuation, your final profit and loss might look worse than the actual result. That's because the system executes the closure based on price slippage at the time of liquidation.
So even if you only intended to take a $3,900 loss, once this base spike in gold or Nasdaq and suddenly is $4,200, that's why we say don't radiate.
Alright, let's talk about how to avoid violating this rule because this is where the pro mindset kicks in.
First tip, know your buffer. Never plan trade to take you right up to the edge of your limit. Leave at least 10 to 15% room below the mark loss, especially in volatile market.
Tip 2, check your equity, not just your balance. I can't stress this enough. Most traders stare at their balance all day. But if your floating loss is dragging your equity, you are heading toward a violation.
Tip 3. Use a dashboard or tracker. Inside WeMasterTrade, we provide risk dashboard that show your live drawdown status. Use them, check them, don't rely on memory.
Also, post trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to revenge straight your way back up.
Another big one, trade smaller during news hours. If you are trading gold during NFP with full lot size, you are practically begging to break the time loss rule, cut position size and ride past volatility.
Alright, thank you owners and Brad for the briefly about the daily loss limits. So next up we'll have a little break.
Number 1. Over leveraging. Trader opening position at that 5, 6, or 7% of this account, thinking they close quickly, but if the trade turns red fast, it's really too late.
Number 2, holding overnight without checking exposures. If you hold 3 trades overnight and wake up to a 60 pip gap, the line loss could be hit before you even open your eyes.
And the third, assuming that closed trades are all that matters, they are not. Remember, equity includes both flowing and closed position. The total equity lines is your score. So next time we'll have a little break. welcome back with WeMasterTrade, and next up we will move to the next one of the live session. So we will move to the max loss rule. So what exactly is the max loss rule? Let's define it simply. It's the total maximum amount you are allowed to lose across all trades for the entire account if your equity, that is your real-time capital including open trades, ever drops below a certain percentage of your starting balance, your account is gone, period.
So the max loss rule is the last safety net. If the daily loss is your daily seatbelt, then max loss is your airbag. If the limit is hit, it means the account is deemed unsalvageable under your current trajectory and is closed immediately.
Well, so what exactly is the max loss rule? Let's define it simply. Is the total maximum amount you're allowed to lose across all trades for the entire account. If your equity, your real-time capital including open trades, ever drops below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss, which reset every day, this one doesn't reset. It's calculate. You can lose 2% one day, 3% the next, and if your total loss cross the line, that's it.
And the percentage limit depends on your package. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you started with.
So let's walk through the concrete example. Suppose you have an instant funding account with an initial balance of $50,000 and your max loss limit is 6%, which is $3,000.
That means your equity can never go below 47,000 ever. Doesn't matter if you make 1,000 yesterday. The total loss from your highest point back down to that threshold, it won't matter.
And remember, these rules include both closed losses and floating losses. So if you have lost $2,000 in closed trades and you have another $1,200 floating rate, your equity is now at 46,800. That's below the limit. Account is closed.
And just to be clear, it's not about the net gain or losses across trades. It's about where your equity stand in real time related to that stop loss fall.
Here we get interest and a little tricking. Let's say your account grew to 51,000. Currently, you're in profit.
But your max loss limit is still based on your original $50,000 starting balance. So if your limit is 6%, the threshold is still 47,000. What changes is how much room you have to fall before you hit it.
Exactly, you now have $4,000 in total buffer because $51,000 minus $47,000 equals to $4,000. So your profit gives you cushions, but the floor never moves.
And once your equity drops below that maximum loss threshold, even by a few dollars, our liquidation triggers. All trades are closed immediately at market price.
And again, like with the daily loss, if there volatility or slipback, your account might close out below that line. That's just execution reality.
And most importantly, once it's breached, that account is permanently disabled. You need to purchase a new package if you want to continue trading. No resets, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total close loss every day. You should always know how close you are to your max loss floor. Don't wait for that ball warning. Calculate it manually.
Second, your profits are protection, not permissions. Don't treat floating profit as green light to increase risk. Instead, consider locking gains by reducing lot size when you are ahead.
Third, manage your flowing drawdown aggressively. Even if you are positive overall, a single trade with poor stop placements can take you from safety to shutdown in a few minutes.
4. Stay cool. When you close, if you're down 5% out of your 6% limit, that's not time to double down. That's the time to step away, pause, and rethink your entry.
And the biggest mistake, underestimating floating drawdown. Traders go 3 losers and think, okay, I still got room, but they forget about the 4 trade floating minus $1,800.
Second, traders who trade recovery after the bad day. They lose 4% in one day, come back swinging the next day thinking they can make it back, and instead take another 2%. Boom, violation.
Third, and this one hurts, ignoring slippage during major news. Even with a tight stop, news candles can get you straight through your limits.
The mark loss rule is a set reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know see their stop loss whether personal or institutional as non-negotiable boundary.
Right, it's a reality check. If you are consistently brushing up against your max loss, the problem isn't the rule. The problem is your system or your psychology.
At WeMasterTrade, we're not just giving capital, we're teaching structure, and the max loss rule is what separates gamblers from professionals. So remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance. It includes both close and floating losses, and once breached, your account is gone. Well, coming up next, we'll explore the consistency rule and why steady profit matters more than big spike when it comes to growing, scaling, and getting paid.
If you have ever made 5,000 in one day, then made 200 the next 4 days and wonder why your payout got flat, this next segment is for you.
Let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
Stay with us. This is the WeMasterTrade live stream where structure meets opportunities. Alright, we'll talk about the daily loss limit and we'll just cover the max loss rule, 2 pillars of protecting your capital. But now it's time to shift gears just a little and talk not about risk but about results. Because here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, you need more than just a winning day. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a blue-chip right from a reliable trader. It tells us whether you can make money over time or if you're just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawal, profit sharing, and even scale up. So if you're funded and you are wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profits, the lower your ratio. The less consistent, meaning you had one giant profit day and then smaller of losing days, the higher your ratio.
The idea is simple. If 80% of your total profit came from one day, that's not consistency, that's look or risk. What we can to see is traders who make profit day after day, even it's small. That's what we can scale.
So how is it calculated? The formula is really straightforward. Take your best trading day's profit and divide it by your overall profit since you started the account, then multiply by 100.
So that means your best day divided to your total profit and multiplied 100.
And just to be clear, bad day refer to your high close profits in a single calendar day, and total profit is a sum of all your close profits minus any close losses or open losses across the life of account.
So let's say you have the following results over 5 trading days. The day 1 $100, day 2 $200, day 3 minus 50, day 4 $100, day 5 $60.
And your best day was day 2, that $200 profit.
So now we apply the formula to $100 divided by 410 equal to 0.4878. Multiply that by 100, you get a profit consistency ratio of 48.78%.
Now, let's say your account requires 20% profit consistency with e-commerce. This trader is way above that, so they wouldn't qualify for a payout yet.
So even though this trader is profitable, they're not consistent enough. They had one big day and made up almost half of their total profit. That's not sustainable, and that's what we're looking at.
And this is where I really want to speak to traders. If you are relying on 1 or 2 big days to carry your entire account, that's not professional trading, that's volatility. You can get lucky, but you won't stay funded. And remember, it's not just about your payout this week. WeMasterTrade evaluate your consistency over time. Traders who show long-term balance are the ones to get scale up, who get features, who get structured with more capital.
Oh, right, so let's address the numbers. What's an acceptable profit consistency ratio?
Well, typically the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. And let's say you are over the limit, don't panic, you are not disqualified. You just need to keep trading and even out the curve.
Here, how to do that. 1. Trade smaller size for a few days. 2. Take smaller controller. Win arm for 200, 300 days. 3. Avoid big swing trade that could spike your ratio again. 4. Spread profit across multiple days, not one monster setup.
And for those using EAs, monitor your equity curves. If your EA is skewing profits heavily into one day, you might need to rebalance it. The bot might be profitable, but it won't pass this rule unless it's configured with payout logic in mind.
So, some common mistakes to avoid. Mistake number 1, traders hitting target early, then taking the rest of the week off. That inflates your best day and leave the rest of your curve flat.
Mistake 2. Overtrading after a big day, thinking I'm safe now, and trying to increase more instead of averaging out that high ratio.
Right, and mistake 3, thinking this rule is just a hurdle. It's not. It's a free reflection of what we actually look for in our master traders.
At the end of the day, this isn't about controlling you. It's about building habits that can handle scale. If you can be consistent with 200 and 5,000, what happens when we give you 100,000 or more?
Exactly, consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we've seen it time and time again. The traders who respect this rule, they are the ones who get multiple payouts, referrals, and grow into six-figure funding accounts.
So don't fear the rule, understand it, use it as a feedback tool. If your ratio is too high, great, that means you have got profit. Now keep going, balance it out.
And remember, You don't need to calculate it manually. WeMasterTrade dashboard calculate your profit consistency ratio automatically. You can check it anytime under your statistics tab.
So to recap, this rule is about balance, not volume. Aim to keep your best day under 20% of your total profit. Spread your wins across multiple sessions and monitor your progress. In the dashboard, we walk through the daily loss limit, tackle the maximum account loss, and examine how your profit consistency shape your long-term payout and growth, and more will drive at the final and perhaps most overlooked rule of all. So next up about the risk consistency rule, or what we call the discipline test.
That's right. Traders often think the biggest enemy is the market, but truthfully in a consistent, especially in how much you can risking from one trade to the next.
Well, this rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you are managing your position sizing. And if you're serious about scaling at WeMasterTrade, this rule is non-negotiable.
So let's break it down. At its core, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that includes all losses associated with that trade idea, both low losses and floating losses, even fees, commission, and swap are counted.
And for some accounts like the 5% OBC package, this rule gets even stricter, that the limit is 1% per trade years, not 2%.
So why does this matter? Because consistency isn't just about an outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity curves become, and that makes you hard to scale.
This rule protects both you and the firm. It helps reserve capital, prevent loss, equity swing, and make sure you actually play out over time.
Think of it as your account heartbeat. If your position size pulses up and down, 0.5 loss for one day and 5 loss the next, the system flags it. That's not structure, that's chaos.
So this is where it gets technical, but stay with us. The term trade idea isn't just one order, it's a group of trades that share the same logic.
Entry buy position on go at different times, and you close them within 3 minutes of each other. That's one trade idea.
Because it's the same symbol, same direction, and close around the same time, even if you open them at different times, they are seen as a single, unified position from a risk perspective.
So the system doesn't look at your trades in isolation. It groups them into logical bundles and applies the 2% rules across the entire bundle.
You can have multiple celebrate trade ideas as long as each one respects the risk limit.
For example, if you go long on gold, short on GBP GBY, and short on AUD USD, each position has its own distinct direction and asset. Those are three separate trade ideas, and each one can raise up to 2%.
And what's not allowed, let's say you go buy on gold, and then you go buy again and again. You now have 3 open positions in the same direction on the same asset.
Yep, the system treats that as one trade ideas. So if the combined floating risk or eventual loss from those positions is 2% of your starting balance, boom, you have broken the rule.
Another mistake, opening multiple go buy, then closing one 10 minutes later, and two orders together. The system still group trades close within 3 minutes of each other. So mindful of your close timing.
And let's go hands-on. Suppose you have a 100,000 account. The 2% minus risk per trade idea means you can't lose more than $2,000 on any trade idea total.
So you open 2 go buy, 1 lot each. You don't play a stop loss, new hit, market drop 100 bips, each order lot losses 1,000. That's 2,000 total.
You write on the line, if slippage or swap adds a few extra dollars, that's it, rule broken, account flagged or liquidated depending on the enforcement model.
And on some accounts, especially instant funding accounts with stricter tolerance, this breach may result in loss of funded status or immediate closure.
So talking about the pro tips to stay risk consistent, tip number 1, set your loss size based on your account risk, not emotion. Know how many pips equal to 2%.
Tip 2. Use stop loss order. Set them based on risk per trade idea, then random check level.
Tip 3. Don't stack trades without calculating combined risk just because one position is below 2%.
Tip 4. Label your trade ideas mentally. If your entry on the same setup, treat it as one, size it accordingly.
Tip 5. If you want to split an idea into multiple entries, do it small, scale it smaller. You might throw loss if needed. Keep the total exposure below 3%.
And for the common violations, the most common reason traders break the rules is stacking multiple entries on one trade idea, thinking it's still separate.
Second, opening high-risk trade after wins, assuming they're playing with house money. Spoiler, the market doesn't care.
Third, neglecting floating loss. A trade may not be closed, but the floating rate still counts toward your 2% risk.
Listen, just policy, this professional, proactive, hedge fund allow this, bank allow this, real trader allow this.
Exactly, we're not here to micromanage you. We are here to protect your account, our capital, and the integrity of this community.
And traders who internalize this rule, who understand that small, consistent risk in the foundation of scalable capital, those are the ones with growth. Those are the traders who go from $20,000 to $1 million.
If you want to be a professional trader, you have to think like one. And professional trader always know how much they risking on every trade every day.
And if you're still guessing your lot size or opening trades because the setup feels right, take this as your sign, step it up, get structured.
This is more than a rule, it's a habit. Build it out and the path to go bigger capital and larger payouts become way more predictable. And that, my friends, wrap up the 4 essential rules of trading at WeMasterTrade. Daily loss, maximum loss, profit consistency, and risk consistency. Master these and you're not just staying compliant, you're building a foundation for serious capital management, long-term payouts, and scaling. You're watching the official WeMasterTrade live stream and the best is still to come. Alright everyone, this is it. You made it through the risks, rules, and the profit conditions and the structure of our account. So let's talk about why it's all worth it. Because at the end of the day, we know that every trader wants
more capital, more room to trade, bigger loss, higher reward, without even putting your own money at risk.
And that's exactly what the WeMasterTrade scale plan is built to provide. This is your roadmap from being a small account trader to managing a 1 million funded account. And it's not fantasy, it's a clear path with defined milestone.
And what is the scale plan? The scale plan is our performance-based growth program. As you trade well, meaning you hit your targets, avoid violations, and demonstrate risk control, we increase your capital allocation. In other words, you earn more room to trade without spending more out of pocket.
And let's be clear, this isn't tied to subscription model or gimmick. You don't pay for scale up, you earn it. Don't consistency, profit, and discipline.
And the scaling is aggressive, we are taking doubling, tripling, and eventually scaling you all the way to 1 million in funded capital, depending on where you start.
At WeMasterTrade, we offer two types of scale-up plans depending on your account type. First is the percentage-based scaling, mostly used for trading accounts, and the amount-based scaling, using instant funding accounts like 10,000, 25,000, and 50,000 and beyond.
Let's start with a percentage-based plan. You begin as Evolution Trader Level 1 with 100% of your base account. Hit the 20% profit target with profit consistency, and you're promoted to Level 2, where your capital increased by 50%.
And from there, the growth is slow. Up level 3, you will get 300%, 600% on level 4, 1,200% on level 5, 2,400% on level 6, and the maximum allocated capital is 1 million.
And for each level, you don't just need to hit the profit target, you also need to complete at least 2 payout cycles, so the system knows you're not just performing, you're stable.
Now, for instance, funding account, the scale-up works with the set dollar target, and the plan adjusts depending on your initial funded size.
Let's take the 10,000 funded traders as an example. Here's how the level look. $10,000 level 1, 15,000 at level 2, 30,000 at level 3, 60 at level 4, 120,000 level 5, 240,000 level 6, level 7 you get 480,000, 960,000 at level 8, and at level 9 is 1 million.
Each step has its own profit target, usually 10 to 20%, and some levels require profit consistency, especially in the early stages. Once you are beyond level 3 or level 4, the consistency requirement drops, and it becomes all about raw performance and discipline.
If you start with 25,000 account, your first profit target is 5,000. Hit that with consistency, you pump up to 37,500, then 75,000, then with 150,000 all the way to 1 million.
And don't worry, you don't lose your account if you don't hit the target fast. There are no time limits. You grow at your own pace as long as you stay within the rules.
And the requirements to unlock scale up. To move to the next level, here's what you need to do. Reach the specified profit target. Avoid all violations, especially mass loss or daily loss. Complete at least 2 successful payouts. Maintain profit consistency if required for that stage.
When no conditions are met, we issue a personalized trading agreement and upgrade your account size.
And the best part, with a bigger account, you earning more without increasing your risk per trade. That's real capital leverage. So let me be real for a second. The most common mistake, overtrading to force the target. Trader push too hard trying to scale fast and end up violating drawdown.
Another one, ignoring consistency in the early level. If you make 80% of your profit in one day, that payout won't qualify. If you need to spread your win.
And of course, not planning your growth, you should know what your next scale target is and trade in a way that prepares for it. Don't just trade for today, trade for level 7. And next up, we will move on to the news calendar.
Scaling isn't just financial, it's mental. Every level brings more capital, but also more responsibility. If you're straight trading 10,000, how you will handle 300,000?
So let's move to the economic calendar analysis for June 26. At 1 p.m. Euro-German GFK consumer climate. So we kick things off with a consumer confidence drop in Germany coming in at -20.3, lower than expected. And that's another signal that German consumers are still bursting mistake. It's not a market mover by itself, but adds to Eurozone slowdown concerns. At 3:30 p.m., GBP MBC member Braden speaks. So MBC Braden is on the mic again, give an ear out for rate guidance. As for sell data, still negative at -24, though slightly better than last month. Still very quick though. UK retailers are clearly struggling. Bearish GBP signal unless offset by more hawkish commentary later. And at CPM GBP POE, Governor Bailey speaks. Whenever Piley speaks, the market listens. If he hints at higher for longer rates, GBP could spike, but if he shouts downwards, pray for some softness. And this is your GBP volatility window traders. At 6:30 p.m. USD, US data storm incoming. The first one is final GBP minus 0.2%, unemployment claim 244,000. Slightly better than 245,000 expected. Durable goods orders at 0.1% at core. The headline massive jump to 8.6%. The final GDP price index 3.7%. Good trade balance minus 86.3 billion. And wholesale inventory 0.2%. That's all for the news.
Thank you, owners and Ralph, and that's wrap up today's live stream. If you have any question or need assistance, feel free to reach out to our support team or connect with us through our community channels. We're always here to help. Thanks again for tuning in. Trade smart, stay consistent, and we'll see you next time. Happy trading, everyone.